Well, on top of downgrading its overall global growth outlook in 2023, the World Bank have also downgraded growth prospects in parts of Asia. In Southeast Asia, the World Bank have downgraded its 2023 growth outlook for many countries. Thailand saw the most significant downgrade as their 2023 outlook was reduced by 0.7%. Indonesia's growth outlook has also been downgraded by 0.5%, as Indonesia's GDP is projected to grow by 4.8% this year, down 0.5% from the previous forecast of 5.3%. Despite the downgrade, the World Bank still believes that private spending in Indonesia will remain robust, while business confidence is also expected to remain solid amid strong macroeconomic fundamentals and structural reform momentum, including in tax policy and administration. Meanwhile, among Southeast Asian countries, Vietnam is forecasted to see the highest growth in 2023 of 6.3%. However, the World Bank noted that Vietnam will be particularly affected by slowing export demand, including from China. Now, the overall growth outlook for East Asia and Asia Pacific has been downgraded to 4.3% from the previous 5.2%. In their report, the World Bank said that the downgraded outlook was due to a broad range of factors, including COVID-19 related disruptions, weakness in China's real estate sector, and weaker than expected goods export growth across the region. Now, the downgrade outlook for Asia follows the World Bank's recent warning that the global economy will come dangerously close to a recession this year, led by weaker economic growth in the US, Europe, and China. The World Bank slashed its forecast for global growth in 2023 by nearly half, from 3%. Now it is down to 1.7%. In its forecast of a potential global recession, the World Bank cited many factors, from high inflation, a global food and energy crisis, and even climate change-related disasters.
The possibility of inflation remaining elevated, that could trigger financial stress in some emerging market developing economies, and that could also trigger a global recession. We have a major war in Europe still there. Geopolitical tensions could escalate. Food and energy insecurity could be a problem. Social tensions, another major risk. And of course, COVID outbreaks, we cannot basically rule out. Beyond these, we should always keep in mind risk associated with climate change, the higher likelihood of natural disasters, as well as weaker growth outcomes, much weaker than what we are expecting. And there is this broader risk of fragmentation of global trade, investment, financial